Okay guys, welcome back to the channel and thank you for tuning in. I hope you're all having amazing starts to your day. In today's video, we are taking a look at the macro and the short-term price action for Bitcoin, the total cryptocurrency, and total altcoin market. Over the past 24 hours, we saw a breakout of the $120,000 resistance, resulting in a strong rally into 122,000. However, we have been unsuccessful in sustaining above that $120,000 support level, resulting in both the total cryptocurrency market cap dropping back below 3.95 trillion and the altcoin market rejecting from 1.06, both critical high time frame levels of resistance. We are going to be discussing what this recent rejection means for Bitcoin, whether or not is something we should be massively concerned about, the potential for reversals and bounces back toward the upside, and of course, our bearish triggers for if the trend does continue down. By the end of today's video, you'll have a well-rounded and comprehensive understanding of the short term, the trigger points, the key levels you should be watching, and of course, the macro charts. Before we go ahead and get into it, make sure to smash that like button, hit that comment button, and subscribe to the channel. We post daily videos of Bitcoin focusing on the facts, the data, the technical, and the structural information. No hype, no BS, no emotion, just pure, raw TA. If that is the kind of content you are interested in, you can join us on Telegram. This is the first link down below. You'll get access to charts, updates, videos, educational posts, news events, and everything you need to stay in the loop for cryptocurrency with Bitcoin and the relevant economic news. And if you were interested in joining our VIP channel, you can do that by clicking the pinned comment of the free channel, contact our admin, check out a 54+ month trading track record, or even watching a 10-minute video inside the channel. You'll get access to two channels: the main trading channel where we post trading setups with exact entries, exact targets, exact stop losses, and of course our variety of group chats, from the general chat to the trading chat, the education chat, to the news chat, the daily video, the help community trade setup chat, and trading and coding chat. Check it out guys, we'll love to have you in there. Let's jump into the content. Taking a look at Bitcoin, some larger volatility over the past 24 hours with initially a break of that $120,000 level, resulting in a strong rally into 122, being unsuccessful to break through the buy-side liquidity at 123, and unsuccessful in turning that 120 resistance into a point of support, resulting in a correction back towards the POC. We'll come back and discuss this in today's video. Of course, with that, we did see the total cryptocurrency market cap and altcoin market cap slightly suffer, and Bitcoin dominance push very, very slightly back toward the upside, but still very much sitting underneath that 50 EMA. Jumping over to the market data, 24-hour volume is up 46% as Bitcoin did break through a key level of resistance, a surge up to 433 billion in volume, and liquidations as well, jumping aggressively up 95% at 570 million. 358 million coming from longs, 212 million coming from shorts. Jumping over to the DXY, not too much of a change over here. I think we did see President Donald Trump announce an extended pause on tariffs, so we did see a little bit of a jump up here on the short term for the DXY, but all in all, not too much of a movement over here for the DXY. The overall trajectory is still going to be pointing downwards, provided interest rates do drop in the near future. Looking at the S&P 500, holding very steadily above that 6,250 level. Again, as we mentioned in yesterday's video, provided we remain above this horizontal base of support, we would be expecting the trend to remain in an upward trajectory. It is only if we break back below this level are we then going to be flipping bearish and expecting stronger and larger corrections, potentially back into the 6,000 to high 5,900, 800 range. So until then, provided the base of support holds at 6,250 and that 50 EMA holds, we will most likely be looking for continuation in 6,500 and above, watching very closely over here. Moving over to something like a weekly chart, we can see on the weekly chart, we have been creating a very strong uptrend over the last few months. We do, of course, have this most recent week high at around 6,450, and the current weekly candle is sitting just below there. So ideally, we do push above here to avoid creating a local lower high, which could result in the initiation of a short-term pullback developing back into that support. So watching to see how that develops over the coming days, particularly into next week. But overall, looking good provided we remain above those two key levels. That is it for the broader updates, guys. Let's go ahead and jump straight into Bitcoin. Before we do, go ahead and sign up to the exchange links down below. BitGet, BitUnix, and BingX. You get a lifetime trading fee discount of 15%, which can build up to 45% based on your trading volume. You'll go to support me making this content for you on a daily basis. If you do want to support me making this content, the best way to do so is by clicking and signing up to those links. You'll trade on exchanges I use and I trust. I will play an ad. Check it out, we'll jump back in. If you are looking for a new exchange or just want to support the channel, sign up to BitUnix with the link down below. You'll get a lifetime trading fee discount of 15%, which can build up to 45% based on your trading volume, as well as access to a bonus reward center, and of course, all of the exclusive campaigns we run on this exchange. You'll also get access to BitUnix being a non-KYC exchange, meaning you can sign up from anywhere in the globe without regulations. And most importantly, I only promote exchanges I trust and I use. As you can see, I trade on BitUnix very regularly, being the highest VIP level with over $500 million in trading volume for the last 30 days. And lastly, if you were interested in signing up to our other two exchanges, BingX or BitGet, you can also do that via the links down below. You as well will get the 15% trading fee discount and everything else that comes with it. Go ahead and sign up. Thank you for supporting. Let's jump back in. Okay guys, let's go ahead and get right back into it. Now, more or less, the most important levels we discussed in yesterday's video, that being for the total cryptocurrency market cap and the altcoin market cap, are still very much in play. We've talked a lot about that $1.06 trillion level on the altcoin market cap over the last few weeks, and we're going to go ahead and start on the altcoin market cap again. We mentioned that that $1.06 trillion level has been a level of resistance historically over the weekly chart, where we've seen many intra-week breaks toward the upside. So many breakouts toward the upside of that $1.6 trillion level, $1.06 trillion level, which did not result in weekly closes above. With, as you can see here, some very large wicks toward the upside, what, 3 or 4 breakouts over here, another 3 to 4 breakouts over here, but none of these have actually facilitated a weekly close above. So we are watching very closely for a weekly close above 1.06 trillion for the altcoin market cap, for continuations toward the upside again to 1.16, which is going to be this prior 2024 December high. Now, as we mentioned in yesterday's video, and as we've been discussing, for the altcoin market cap to continue upwards, we need to see a very specific combination of things occur. Number one, we need to see Bitcoin dominance either push sideways or push downward. And number two, we need to see the total cryptocurrency market cap, while that is happening, continue upwards. If the Bitcoin dominance chart is continuing upwards, and we see the total cryptocurrency market cap continue upwards, we will see the altcoin market go up, but it will not go up very aggressively, as money will be rotating back to Bitcoin. So we want to see aggressive moves to the altcoin market. The best combination is going to be the total cryptocurrency market cap moving upwards and Bitcoin dominance moving downwards. That is when we see the best returns for altcoins, as more money is coming into the market in combination with money exiting Bitcoin and moving into altcoins, generally high caps, Ethereum, etc, etc. When we're looking at the key levels for the altcoin market, again, the key level we need to sustain above is going to be that $1 trillion psychological support. Again, that is going to be sitting around about the baseline of the Ichimoku cloud, which is this orange line. So provided we remain above this 1 trillion support, we'll go ahead and mark it out over here, there is a good chance we push back on up towards the 1.06 and attempt to break through. We discussed in yesterday's video, and we'll mention right now again, for the altcoin market to close a weekly candle above 1.06, which we know is the trigger for continuations to 1.16, okay? And for that to occur, the weekly total market cap will be continuing up as well. We need to see Bitcoin sustain above 120. So only if we see Bitcoin sustain above 120,000, that's why this breakout was so important, right? Will we see the rest of the market continue toward the upside? So we'll come back and discuss Bitcoin in just a moment. So that is the altcoin market. Those are the key things we are watching moving into the weekly close, of course, and on the short term, we are watching that $1 trillion level very closely. If we take a look at projections, of course, if we break through 1.06, we reach that 1.16 and above 1.16, we essentially enter price discovery for the altcoin market. In terms of bearish considerations, if we drop back below 1 trillion, it is likely we will see a correction again back into 940 billion. And when we see this move, it is probable that Bitcoin dominance will push back upwards again. So that is something to be cautious about. But for us to see that move, we will need to see Bitcoin continue downwards, likely to come back to retest or at least drop below this $115,000 point. We'll discuss that when we get to our Bitcoin analysis as well. So there is still hope for the altcoin market. It was not great seeing this rejection from 1.06. Of course, it was not great seeing the rejection and inability to sustain above 120, but that doesn't necessarily mean it is over and there is no chance of these reversals. We are still sitting above some important levels on the short term here for the altcoin market, and we still do have potential to break through these horizontal resistances if the market facilitates it. So definitely still something to keep an eye on. But again, for altcoins to really start popping off, we need to get above this level, and that is when we expect mass rotations to occur back into altcoins, just like we saw on that initial breakout of 940 billion. Let's jump over, guys, to take a look at the total market cap now. Now, the total market cap, as we know, is very much determined by where Bitcoin goes. Bitcoin is 60% of the market dominance at the end of the day. So if Bitcoin decides to absolutely dump, we will see the total cryptocurrency market cap pull back, of course. And when we see that happen, the altcoin market will, of course, follow. So Bitcoin still leads the cryptocurrency market. And of course, we need to be paying attention to that as it has a massive impact on how the total market cap develops. But the total market cap can still be very useful as it sets the tone for what we should expect for the broader cryptocurrency market cap or the broader cryptocurrency market moving forward. It tells us in very simple terms, is the cryptocurrency market in an uptrend? Is it in a downtrend? Is it exhausting? Is it absorbing? It can answer these broader questions, which can help us contextualize how the short-term price action is going to develop over a period of time. So when we're looking at the total cryptocurrency market cap, there are some very important levels we are watching. Level number one is going to be the current uptrend. If you're trading on a macro basis, of course, you want to remain in the trajectory of these trends. If you're trading on the short-term basis, you'd be zooming in and watching the fluctuations. But in terms of the macro uptrend, again, provided we remain above this uptrending diagonal trend line, technically speaking, we are still in a uptrend. So the direction of the trend, provided this trend sustains, is still going to be pointing in the upward trajectory. Now, at some point, this trend line will break, and when it does break, whether or not it breaks over here, whether or not we push up and we come down and break it up over here, at some point when this trend breaks, the trajectory of the trend will shift into a downtrend. Now, whether or not that downtrend will be an extended correction into sell-side liquidity, or whether or not it'll just be a short-term pullback before we find local support and continue upwards, is a question we cannot answer yet. But of course, if we're looking to flip bearish for the total crypto market cap in terms of the weekly chart, you're watching this uptrend over here. In terms of other trigger points, we have got, of course, our weekly range high. We can see over the past week, we came back down to retest the weekly range high. We were able to close two weekly candles above, the first one closing just above, and the second one engulfing the prior candle, closing well above, indicating that we have strong demand at this level. Essentially, we have flipped what was once a prior resistance into a current support. So this is going to be a high time frame level of support. Breaking back below that level will be a sign of massive weakness and potentially a reversal signal toward the downside. If we're looking at continuation triggers, as we know, Bitcoin needs to sustain above 120 to facilitate a continuation upward for the total cryptocurrency market cap. But if we're looking at those trigger points, all we need to see is the price sustain above 3.94 to 3.95 trillion to actually enter that next zone of price discovery to facilitate continuations upward for the cryptocurrency market cap, which again is just the reflection of 60% Bitcoin dominance for Bitcoin and 40% for the rest of the market. So we know already by moving into this region, it is likely Bitcoin is pushing as well into a high volatility region, which is essentially pushing Bitcoin into an all-time high or into price discovery. So you can see how these charts kind of work together. They are not separated. They can be used as confluence to confirm particular theories you have about how the price action will move. That brings us to Bitcoin's price action. We'll start on the weekly chart and then we'll bring it down to the short term. So you know what, let's jump over to our other chart over here. This is going to be our weekly chart over here. We do have some warning signs. We've had this for quite some time. The first one we are going to be paying attention to is the RSI. Of course, we did see a breakdown over here on the RSI, a negative momentum shift. We've talked numerous times about why this is important, but also why it isn't the be all and end all. If we look for confirmations for breakdowns, so confirmation for a breakdown in other terms is just, we're looking for scenarios where the probability that the breakdown will not turn into a fake out or a failed sustained move. Okay, so a confirmed breakdown is a breakdown where the probabilities that the move through the trend is going to be of a higher confidence other than what we consider just a fake out or a failed sustained break. When we're looking at that, when we're looking for confirmation, I personally use a 3-point method. Okay, this is my personal 3-point rule. I developed it myself. It's something I've been using for a long time. Trend, structure, strength. 3 different criterias. The more of these criterias I tick off, the higher confidence I have that the breakout will sustain. Of course, it is not 100% guaranteed. Nothing in trading is, but it does shift the probabilities in favor of the trend sustaining over a period of time. When we're looking at the current trend, the only thing that we have that is in favor of a confirmation for a continuation downward would be strength. Strength, again, a measurement of momentum. We can see a negative momentum shift, which is bearish. In terms of the structure and the trend, both of which in a bullish pattern, suggesting these two are not in suggestion of a confirmed breakdown. So we have 1 out of 3 points. This is a weak confirmation and is not something I personally would be betting on at the moment. But things change if Bitcoin does break below that weekly uptrend. So that is something to consider. If we do see a breakdown of this uptrend, that is going to be confirmation 3 out of 3. Trend, structure, and strength will all be turning negative, and that will confirm a correction for Bitcoin. Until then, Bitcoin is above the trend, and just like the total cryptocurrency market cap, the trajectory is still going to be an uptrend and still technically bullish for Bitcoin. Now, when we're looking at the short term, as we know, when we start getting to potential macro tops and whether or not the 4-year cycle is something you vibe with and you expect the 4-year cycle to break or you expect the 4-year cycle to fulfill a game, we are getting close to the 6th of October. We are inside of a 4-week period now of what is expected to be the Bitcoin top. There really isn't too much more movement room for Bitcoin if we are expecting a 6th of October top. Now, if you have a theory that you believe the 4-year cycle will break, and I personally do believe at some point the 4-year cycle will break, it will not continue forever, then that changes, I guess, the scope of how you can look at things. Because number one, it may change the potential top date. And number two, it may change the way the market reacts during the next downward phase. We have to start disassociating the word top to that of which the 4-year cycle top. And we have to start disassociating the word bottom or downtrend or bear market in terms of the 4-year cycle bear market, these 12 months bear markets. The reality is tops and bottoms occur all the time in price action. This was a top. Oh, that's a text box. This was a top. This was a bottom. This was a top. This was a bottom. We have to trade level by looking at the macro scale and, definitively saying there's only one top and only one bottom. It really puts you into a box and eliminates a lot of potential opportunities that may arise during all the price action occurs during these supposed 4-year cycle tops and bottoms. So that is what I'm doing. I'm personally shifting my thinking away from the 4-year cycle while still considering the 4-year cycle as a potential and still paying attention to these dates, right? The dates that the 4-year cycle suggests, and more so focusing on not the date range trend, but I'm watching how the price is moving in terms of momentum, in terms of strength. We know historically that losses of the baseline of the Ichimoku cloud has resulted in capitulation for the cryptocurrency market below the 50 EMA on the monthly chart. We know that if we're looking at on the 2-week chart and we bring up the clouds on the Ichimoku clouds, let's go ahead and quickly go ahead and do that. Here's the clouds for the Ichimoku cloud. Well, actually there's a leading span, so we'll just make it a little easier for everyone. We know that on the 2-week, when we see the baseline of the Ichimoku cloud close below the 2-week leading span A, we see a bottom for Bitcoin. So regardless of when these events occur, based on the 4-year cycle, we can confirm these events with a variety of different means, right? There's plenty of ways to skin a cat. So that is the point I'm getting to. When we're looking at the short-term price action for Bitcoin, we need to start looking at the short-term price action, not in the scope of the 4-year cycle, but just simply in the scope of how the short-term price action is developing. Is it bullish? Is it bearish? Is it going higher? Is it going lower? Where are potential tops? Will these tops develop into further downtrends? Not having to associate it to what it must do as a consequence of the 4-year cycle, right? Because the 4-year cycle doesn't determine where the price is going. It is a diagnostic, descriptive means to explain what has occurred in the price action, not what will occur, right? Cycle trading is not predictive, it is diagnostic. It is not useful in predicting because it doesn't apply, like we said yesterday, the smarter acronym, I can't speak. Specific, measurable, what is it? Smart, realistic, time frame orientated, okay? All these different things we look at when we're creating potential targets, we need to be able to actually have actionable information. So taking a little short term, we'll wrap it up with a short term price action. Rejection from 120, we're looking to see how that price is developing. Of course, ideally, we want to see a daily close above, right? Daily close above would be the highest daily close we've ever seen for Bitcoin, and that would likely indicate to us we've spent enough time above this area to flip it into support. Because when we're looking at time frame based closes, it's not because we've closed a daily candle above a level that we're going higher. It's because if we close a daily candle above a horizontal level, the chances are we've spent a long enough time above that particular horizontal price for orders to come in, limit orders to come in and be placed at that level, turning it into a point of support. So if we come back to retest it, we have a stronger level of demand to facilitate continuations up from than if we were to close like an hourly candle above, right? That is why time frame based closes are important because they increase the potential that the breakout will sustain because it gives it more time to actually turn these points into support. When we're looking at the immediate short-term price action, I'm not too worried about this pullback. The reason being, again, if we're looking at these lows, we have a low over here, we have a low over here, we have a most recent low somewhere around over here, but we are sitting above the POC. So the lowest I think we could push down to is a break of structure. We're looking around 17640, okay? And then it is likely we come back up for a retest at this point. The interesting thing is going to be to watch is when we retest 120, are we going to create a higher low or a lower high? I keep getting it mixed up. A lower high. If we do, well, that is going to be our rejection. If we break through, it is likely that is when we sustain and continue upwards and through, okay? So the next breakout we see will likely sustain. If we do reject from this point again, it is likely to be rejections back to that range low at around 115. And of course, we know already, there's no need to go over it again, this is the point of confluence between that monthly uptrend and the 115 support. So if we lose that point there, we enter a downtrend. So we don't have much room to play around here for Bitcoin to bounce around. We really need to see bounces occur sooner or later for us to continue upwards for Bitcoin. So thank you for tuning in, guys. Have a fantastic day. Wish there was more to say for Bitcoin. Just a bit of volatility, and we're back to where we were yesterday during this time, essentially. We saw a large look toward the upside. Didn't sustain, resulted in the total cryptocurrency market cap and altcoin market cap rejecting. But all in all, still above some key levels, still on an uptrend. The risk of a downtrend is going to be present while we are under 120. I want to make that very clear. The risk of corrections and downtrends are present while we remain under 120. So pay attention over the next few days. And I'll catch you guys in Thursday's video. Bye.